The talking point for Indian markets is clearly liquidity, and one major feature of liquidity is going to be long-term pension money. What should one expect from long-term pension investors into Indian stocks in 2018 and beyond? What about financial, inclusion for equity as an asset class, and how exactly are pension funds likely to invest outside the purview of ETFs? Let's discuss all that and much more with the perfect guest who has all the answers, Mr. Hemant Contractor, Chairman of PFRDA. Mr. Contractor, good morning and thank you for joining us. Now, Mr. Contractor, from a market standpoint, the game-changing moment came when pension funds in principle took a decision to start investing in Indian equities directly. So do you think the trend which started a couple of years ago is here to stay? And could you throw more light on that as to in 2017, how much money PFRDA invested in equities?
Yeah, good morning and thank you for having me here. This trend towards investment in equity by pension fund, actually in the case of the schemes run by us, which are the National Pension System schemes, the movement towards investment in equity started a long time back, almost 7-8 years ago, and currently our investment in equity is around a little over 14% of the total portfolio of about 225,000 crores, so which roughly makes it about 30,000 crores. So 30,000 crores have been invested in equities. And while we do have some investments in ETFs, the bulk of the investments are actually in the form of individual securities. We invest in the FNO stocks. So we are a little choosy about the scripts that we invest in. So we invest in only the bigger stocks. But the trend, at least in the current year, 17-18, has been that the investment in equities, which stood at about 13% or a little less than that last year, has now increased to a little over 14%, like I just said.
You mean exact quantum as to what was your direct commitment towards equities in FY18 then?
Well, the increase in equities this year, see, we have total inflows of about 45,000 crores in a year, and of that, roughly about 6,000 crores would have gone into equities this year.
Can I expect a similar quantum for FY19 as well, where 6,000 or 6,500 bare minimum will come into equities?
Yes, we would expect this trend to continue, and in fact, we are under discussion with the government to increase the amount going into equities and put it on par with the policy that we have for the non-government subscribers. So in the case of government subscribers, the amount that we can invest in equities is restricted to 15% of the portfolio. Whereas in the case of non-government subscribers, it can go up to as much as 50% of the portfolio. So we've said that there should be a level playing field as far as or the investment pattern is concerned, both for government subscribers and non-government subscribers. And the government has, I mean, we had several rounds of discussion with the government, and if the government agrees to our point of view, then we could see actually an increase in investments taking place, because the level will go up from the current 15% of government subscriptions to it could touch as much as 50%. So if this happens, then there could be a surge in equity investments in 18-19.
Mr. Contractor, are you hopeful though that the government will give a nod to increase in exposure in equities?
Well, we've had several rounds of discussion with the government officials, and in fact the government has set up a committee to look into inter alia this issue, and we are quite hopeful, from the discussions that have taken place so far, that the government is positive towards increasing the share of equity investments for government subscribers. Now, whether it will happen exactly in the way that we have recommended, that is, allowing the government subscribers to go up to 50%, as in the case of non-government subscribers, or some other pattern, that remains to be seen. But the government, in our discussions, we did get the impression that the government is looking at it quite favorably.
So just to get the numbers right, Mr. Contractor, a recent report is saying that combined membership of EPFO and NPS covers nearly a fifth of India's population. Could you give me numbers on the AUM growth that you're seeing right now and how much of that is going into equities as a part?
Well, the current AUM is around 223,000 crores as far as NPS is concerned. And like I said, no, about little over 14% is going to currently invested in equities. So while I can't give you a precise number, but it would be in the vicinity of about 30,000 crores or so. So that's the amount that is currently invested in equities.
Participating in the IPO market, would you be interested in participating in any of the government CPSC or Bharat ETF kind of offloading which they could do in FY19? I mean, in principle, do you think that is an instrument or that is a vehicle where you think you would be happy to put your subscribers' money?
Yes, in fact, we did invest in the last ETF round which the government had come out with, about 1.5 months back. So we did make some investments there. So we are open to the idea of putting in money in the ETFs with the government comes up with.
Do you see PFRDA playing a very large role on the boards of companies? I mean, LIC, apart from being just an insurance company, they are an investor, and being an investor, they have presence on some of the best blue chip companies. Since you have a large size, you are looking at investing $1 billion plus on a yearly basis. In 2-3 years, you would have sizable equity in companies.
Yeah, yes, that remains to be seen actually how much of an investment we'll have in these companies, because there are certain prudential restrictions in place on the amount of equity that we can take in a particular company. So with those current restrictions there being in force, at least for the foreseeable future, I don't see our playing an active role in the management of the companies in which we invest. But there has been one significant development which all the regulators have embarked upon, and that is the adoption of a stewardship code. So what we are doing is, we are laying down a code for all the institutional investors, that is all our pension funds will have to follow this stewardship code very, very closely. And the stewardship code will look into issues like, the voting on issues which come up in board meetings of companies in which we have invested, then matters relating to, conflict of interest and transparency, MIS, all those kind of things, So there's a certain code that all the regulators are laying down for the institutional investors, which will enable them to play a much more active role than they have been doing in the past. So to that extent, their involvement in the companies in which we invest will go up quite significantly from what we have seen so far. So to that extent, our monitoring and supervision of the investee companies will be better going forward.
Comments from you, Mr. Contractor. What about booking profits and locking gains? I mean, last 2 years, if you invested into equities, you made good profits. Is there a mechanism in place at which you start also locking your gains and start booking profits?
Well, we don't tell the pension fund managers, who are actually professional fund managers whom we select on a bidding basis, on the day-to-day activities and strategies that they should follow. But being pension funds, trading is not something that we do on a regular basis. But of course, if there are opportunities to book profits and all that, then they do it once in a while. But short-term buying and selling of securities is not something which we encourage also, because we are long-term investors, and we'd like to stay invested, except unless of course some exceptional opportunity comes up. So other than that, we don't encourage buying and trading of securities.
Okay, Mr. Contractor, appreciate your time and thank you for joining us.